I hope you watched the previous part one. Okay, so we can continue then. We can begin then. So, welcome everybody. I'm Giuseppe Basile, also known as the Film Stalker. We still have some people coming in. This is the Fearless Trader workshop. This is part two, and basically I'm giving a strategy, a game plan to start trading profitably without fear and slow trial and error. I have some students and clients working with me who actually are averaging 30% per month, believe it or not. And if you go to my website, vipstalkertrading.com, you can find testimonials that prove what I'm saying. So in part one, we made a few introductions for these classes for hardworking individuals who want to succeed, people with a special interest in the market, people who want to build lifelong trading skills. They could be professionals or not. I work with many people. So the way this is structured, and I'm not going to cover everything. Trading is not a get rich quick scheme. Okay, make money scheme. You cannot just push some button and execute an EA and become rich. And this is not a way to fake trading, to being a trading expert and deceive yourself in any way. Now, we went through some of the typical problems and issues that trader go through. And the real problem is to do mental shifts. It's all about that. Successful trading is not about the method. It's not about the techniques you use. It's about the psychology, and it's about having clear objectives and following a plan that allows you to actually reach those objectives. Okay, so welcome Abdul, Adam, Al, Bobby, Zamo. Again, I hope you watched the first part of this three-part series, and today we're going to look at three more steps, and I'm going to introduce the first secret for successful trading. And basically, this is a seven-step strategy. When you watch all the webinars together, you'll get a seven-step strategy, and at the end of it, you look at the markets in a totally different way. Okay, we not only have to identify low-risk opportunities, but we also have to understand what's going on in price. What's the price structure? Okay, that's the way I see it. So we have also Mark coming in here. And a lot of that stress and fear of putting on a trade will be gone when you understand not only, welcome Mark, hello Bob, not only when not only the places where the areas where you can get low risk trades, but also when you understand what's going on in price, you'll be more confident in keeping the trades as well, which is the most important thing in generating large profits. Okay, generating large profits requires that you are not right often, but you are right whenever there is a big potential for the market to move, and then you stick with the trade. Okay, this is paramount. This is very important. As usual, if you have any questions, you can type them down in the chat, and I'll be happy to actually answer all the questions. I'm waiting a little bit on the content here. We have Carla coming in. Welcome, Carla. I'm waiting here a little bit because I still see people coming in. Okay, so I totally recommend you to watch the first part as well. So who am I? I'm a leading authority on modern algorithms and smart money modeling in retail trading or modern high volume markets. The technique I study and use only work with high volume markets. Okay, for the past 5 years I've been helping clients implementing a step-by-step process to model price and trends, identify and successfully trade low risk, high probability setups. Note here the modeling of trends. We do not only try to look at low risk opportunities. Okay, we also attempt to model the trends, which means identify the trends in each time frame, and then we put everything together. I'm also a contributor to, of course, FX Street, but also some of the most active tech analysis societies in the world, the Italian Society of Tech Analysis and the Canadian CSTA. Both these societies are members of the IFTA, the International Federation of Technical Analysis. And I've researched for many years advanced trading techniques and published several original research papers. And recently I was presented the prestigious Jake Frost Award in 2017, which was presented to Market Bring in 2016. So my own trading and trading companies have many subscribers, and I have also now many happy customers who are actually averaging good results. And I specialize in swing trading, forex, futures, and stocks with intraday timing, with a proprietary technique that I developed and I called Fib stalking timing. Okay, so in the first part we reviewed step 1 and step 2. Step 1 is all about understanding the nature of the markets, trading, and risk. Step 2 is we spoke many things, particularly risk, the importance of risk. Step 2 is the importance of mastering a method that is grounded in market reality. What do I mean with that is a method that not only, again, tries to identify low risk opportunities, low risk capability opportunities. That's what the majority of people tries to do. But we need something that is grounded in the way the market works, which means it's grounded in the way price reacts to real participants in the market. And I mentioned 2 major participants in the market: the smart money and the dump money. Okay, so the smart money basically follows the it's the group of people who actually enter in the market when there is volume to be sourced, and typically this volume is sourced when the pain is maximum in the market. Okay. On the other hand, there is the dump money that follows what's basically the trends that the smart money is setting up, and the dump money typically uses very simple analysis technique. Okay, so again, welcome Zamo, Mark, Carla, Bobby, Al, Adam, and Abdul. So what I'm going to do, I'm going to start now from step 3. Okay. Now we mentioned the market risk, we mentioned the method. Now let's focus on mastering an effective timing technique. You need a timing technique. Okay, whatever your methodology is to identify setups, you need to have a step-by-step way to confirm that there is participation at that setup. Okay, so it's really timing. It's simply finding the best time to enter a setup so that the risk of the trade can be kept to the lower levels, to the lowest level possible. Okay, the vast majority of timing techniques you see in trading book seminars and methods are kind of imprecise heuristics and only reflect geometrical patterns that are easy to spot, easy to see, but sometimes difficult to explain, and are only pleasurable to our eyes if you think about it. Think about a trend line, right? Why should it be significant for price to break a trend line, and can we use that as a timing mechanism? Okay, but if you have been trading for a while, you know that the effectiveness of these methodologies is limited because they do not capture the activity of large market players. So that smart money I mentioned before, which means that you're stopped out more often and cannot act comfortably when making your position size bigger, because that's the whole point of having a stable and high reliability and high expectancy system, so that at some point we can start working on money management and increase the size of our position or adding to position. And this is really the key for large profits. Okay, so you also want to focus on techniques that are procedural in nature, a timing technique that is procedural and can be defined in a very precise way without misinterpretation, so that you can execute a step-by-step procedure that gives you price confirmation and a clear signal to get involved. Okay, so that's the idea. So market timing. Imagine making now 44%, 47, 100% in 1 month, and anything in between. Okay, so we have been doing this, and such results are definitely possible. If you want to prove, you can come into my trading room and you can look at that for yourself. Now, the best way to generate such results is to identify more frequent opportunities or even pyramid, which is really adding to existing positions as the market moves in the direction of the trade. Okay, so I'll talk about this later on, but you know, and pyramiding is one thing, but the first thing we need to do, we need to time entries on a smaller time frame. Okay, I use, for example, the fib stalking timing, but you can use any other techniques that is actually proven and step by step. And I leverage particularly the price structure that is induced by algorithms and smart money in a very real way, and that's grounded in the way the market works and participants affect price. And allows us to understand what's going on under the hoods and trading with confidence. Okay, so the fib stalking, particularly, its procedure is step by step, and provides a price confirmation level. It's in a way intuitive and easy to use, and helps reducing risk, because here now we wait for the market to push us into the trade, non vice versa, and we only trade after a confirmation by the players themselves. Okay, so that's the key now. And we ask, what about the other group of players, the dump money? We spoke about the smart money. What about the dump money? Can it be timed? Well, yes, it can, because if you think about it, the smart money, it's all about timing what the dump money is doing. The money is like really it's like sitting ducks, okay? And that's the reason why when we start trading, the majority of people lose money. And these are sitting ducks really, being watched, and they are waiting to be roasted by the smart money in a way, if I can use that parallel. So smart money knows exactly where and at what levels they are and how they are likely to behave. Okay, now the timing of dump money follow the same rules that we use to model the presence of dump money and their behavior. So I actually have given some webinars on the smart money and dump money in the past on FX Street, so you can look at my videos on Premium. Okay, so there won't be time to get into that, but you have the information. But again, here the key concept is that the same models that we use to model smart money and the price structure on larger time frame, we can use those models on the smaller time frames and counter trend moves into the setups to establish which party is stronger, whether the party that is actually currently supporting the trend, or the party that is actually trading counter trend. And similarly we can do with dump money. Okay, now dump money timing is also procedural or step by step, allows the identification of areas where dump money is no longer interested. So later on I'm going to show you some example. Okay, so don't freeze now if you don't understand everything, and I'll be very, very clear about that. So the areas that we time are the areas where the money is no longer interested in moving or being of obstacle to price, because remember what we said in part one: smart money initiates trends, dump money follows and obstacles trends. Okay, and that's the reason why, despite and beside the news that have an effect on a smaller time frame, you see always price jagged, and it's very difficult sometimes to understand why price is behaving in a certain way. And the way I came with in the years is to actually model two different groups of traders. Again, the smart money and the dump money, and they have different effects on price. Dump money is not always wrong. Sometimes dump money is right. Okay, so it's part of that we model dump money as well. Now remember that if you're not still in the group of the elite 5% or making money consistently, then you're likely in the group. So if you're not in this group here, the group of the elite 5%, then you're likely in the group of the 95% of losers or people who are break even, and you may well be the sitting duck waiting for to be roasted by Wall Street or large banks. So, and trust me on this because I've been there. So if you don't know where you belong, then I have to tell you, you're part of the group of sitting ducks, okay? And so be very careful, and remember then the takeaway of this step 3 is that you need to master a way to time the markets, okay? And there are ways to time the smart money, and there are ways to time the dump money as well. So that's the takeaway, and you have to research that and learn and how to do that. Again, the majority of traders focus on identifying a low-risk setup, low-risk opportunity. But what you need to do more, one step more. You need to understand price structure, and price structure is imposed on the markets, and particularly I focus on high-volume markets by two different groups of traders, and these are the smart money and the dump money. Okay, so now next. If you want to be successful in anything, not only trading, you need to have a process. You need to have something that you repeat daily and hourly if you trade, if you watch the market like me all day. And the point is, trading is not exciting. It's not an exciting activity. A lot of people who start, and when I started as well, I mean, the idea that I could make a lot of money really excited me, right? But trading is not about that. We mentioned that trading is about it's a business, and it's an activity. It's a business that you have to repeat, limiting risk as much as possible, and so you need to adopt a process. So let's look a little bit deeper here into the fourth key and the step. This is really adopting a repeatable process and using a trading system that not only is based on method that capture the reality of the market and how price moves, but also that fits you as a person, as a trader, as a worker, as a husband, as a dad, and whatever your responsibility are in life, also based on the time that you want and you can dedicate to trading. Okay, that's very important. So after all, the reason why you want to master trading and do and be successful in this business, because it is a business, is because it is something that keeps you up at night, or things that you care about, or you want to improve your more satisfaction. So when I work with traders, we really look into the motivation, and some people, they say, it's family and friends, is giving children the best upbringing and education possible, quality of life, the general family health, traveling. That's something that I love doing, and many people want to do as well, want to have the possibility to travel more. And some people, many people, they also have worries though, not being financially secure in the future, or failing at trading. The economic situation in US, in Europe, actually, there'll be the Italian elections very soon, in 10 days, and I'm going to write an article for FS Street as well. So job security, which is affected by legislation, technology. Technology is going to have a big effect in the future on many jobs. If you think about that, many jobs are going to disappear in the next 5 to 15 years. So lack of opportunity, or sometimes life is just not satisfying. So these are some of the reasons why people want to learn trading, and having a step-by-step process, repeatable process, and a trading system that fits your personality is your ending point. Okay, so this is very important. So let's look at an example here of an analysis process. Now, an analysis process, a good process is simple. It's a step-by-step again, and helps you analyzing the current market and understanding price structure. And again, price structure is induced by smart money and dump money. So what is really price structure? Right, it's a way to frame price in a way to capture the structure that you see in price in all time frames, and that reflects how different participants are involved in the different time frames. So this is a process that captures price structure and and again does not simply identify low risk opportunity. There is so much more into being successful in trading. We cannot just excuse me, wait without knowing when the next opportunity is going to come, or analyze the market and trade the market without knowing what is the current structure, where the market can go. Okay, so the price structure and price discovery, they work together. I'm going to show you an example of a process that I use. Price structure again tries to explain a price using certain models, okay? And now we can also use what I call price discovery to project price forward based on the current positioning of the different participants. Again, algorithms, smart money, and dump money. So typical examples are, smart money participation in areas where the profit levels are, and sometimes those profit levels are respected with uncanny precisions. Okay, now in order to be able to do that, a good trading process also has what I call price discovery, the price discovery component that applies certain rules, patterns to identify what is likely to happen next and validate your trading ideas which are generated during the analysis. So here what I'm trying to say is that not only we have to identify the structure in price, but based on that information that we collect, we can also do price discovery. And price discovery allows us to understand whether there is enough room for a move to happen, the interaction between how the players are positioned in all time frames, and also the application of additional rules and patterns that we can synthesize, studying how the market behaves. Okay, now in order to be able to do that, I see a trading process as a funneling and filtering system that produces valid trading ideas based on the structure in price and how participants are positioned in the market in all time frames, and also what could happen next based on these positionings, and again the rules and the patterns and the general market behaviors. Now the last process is to input the trading ideas into a trading system. Okay, so see it as a filter, as a funneling system. You have a number of trading ideas at the beginning. You perform price structure analysis and price discovery, and now you have a filtered out trading ideas that you put into your trading system. Okay, so such structure, you could think of something like this, and this is what I actually implement in my trading. Now this might look very, very complicated, but then when you understand the single components and you are able to analyze the two major players in each time frame, this process becomes second nature and becomes very, very simple. In fact, I actually implement it on the fly when I analyze markets. And if you come to my trading room, it's free. You can join. I'll give you the link to join. You can look at the video analysis and see how easy this is. Okay, but here is the price structure analysis component that produces trading ideas and also produces information that goes into another sub-processor, which is the price discovery. And all this is kind of step by step. Okay, we apply discovery rules, other proprietary patterns to to price, and then we obtain validated trading plans, but it doesn't end there. You cannot trade this, okay? We want to validate those plans using a trading system, a simple trading system. So can you see how we filter all the information in this process, and at some point when we get the final trading plans, they're kind of solid and they actually reflect what's going on in the market. Do you have any questions in relation to this? This might look complicated now to you, but it's pretty simple. Three main sub processes: price structure analysis, price discovery, trading system, and then we get the final trading plan. So that's the way you can structure your trading process as well when it comes to generate your final trading plans. And we spoke about trading plans in step 2. Okay, so you can review that on the in the first part. Okay, now trading systems are very important. Actually, they have to be relatively simple, okay, with few rules, because there's a lot of analysis and filtering that happens already through the price analysis process and price discovery process. Okay, so you don't need a complex trading system once you understand what's the price structure. In fact, when you understand how the market is moving and how the trend is developing on each time frame, almost any system, almost any entry mechanism will work for you. Okay, because when the market is trending, the market retraces the less. So even random entries will give you gains, believe it or not. So it's much more important to focus on price structure than focusing on the entry method, for example. Okay, so the trading system is relatively simple and with few rules, and the major focus should be on timing and entering in the right way. Okay, usually when I work on my trading system, they are specified on 2-3 pages, covering all the 8 parts of a trading plan that I presented in step 2. Okay, so you can go back and review that as well. So also traders might have different preferences for time frame, type of setups, participation of different groups of traders. For example, sometimes trading dump money on the larger time frame is much simpler and more relaxing than timing smart money on a 5 minutes time frame, obviously. And there are other preferences like time of the day, time that you can dedicate to trading, whether it's part-time or full-time trading. Okay, so the trading system then can be adapted to the trader's style and preferences as well. Now, because of its simplicity, it is easier to adapt the trading system to the daily styles and preferences. And for example, I have several trading systems, but really the majority I use 1 or 2 of them. And the reason is that depending also on the time I want to dedicate to trading, I have weekly setups with daily timing and daily setups with 4-hour timing, as well as 4-hour setups with I use 45 minutes or hourly. I just use 45 minutes because it gives me a little bit more advantage on the majority that use hourly charts. Okay, so the idea here is that you use one time frame, and that's where your trading system identifies the opportunity, the setup, and then you have a timing technique that goes down one time frame, and you can enter in the time frame below. Okay, I also have technique to jump time frames. Let's say you have a setup in time frame T, and then you can time in the time frame T minus 2. And of course there is a little bit more risk and there's more noise when you do that jump, but that's possible as well. Okay, but here the main idea is that as you gain more experience and you you almost not make any longer reference to your trading system. Of course, it will be always there. You will know that you're following the rules as you should, and that's very, very important. And the analysis will supply all the information required because you develop a high understanding of market participation and psychology. And we'll talk about psychology later on. Okay, but at the beginning, I suggest you use a trading system, and maybe only at the beginning, only one system. Okay, so because you know, that's the way we work. You master one system, you become confident, you become profitable and consistent, and then you can learn to trade that system as well, and then you can diversify into other systems. Do you have any questions in relation to this? Give me a yes if you find this interesting. And now I'm going to get into the first trading secret here, and that's going to be so one of the probably the topics that everybody is looking for. And I'll have in this webinar I promise you 3 secrets. So before I conclude the other steps of the strategy, I'll start giving today one of the secrets. And pay attention here, because you know, these 3 secrets are the key to 20 or 30% per month and beyond. Okay, so you don't want to underestimate this information, as it has the potential to increase your profits and opportunities literally tenfold right away. And this is not an exaggeration. So let me get into this now. You know, I told you that you know, I was going to show you the potential to generate 30% profits. There is no guarantee, because this really depends on the kind of effort you want to put into it, on your psychology and your previous experience. But the idea is that you can generate, and there are people who systematically generate this. You can come into my trading room, and you can also avoid the boom bust cycle, because that's the main problem. You know, there are times where we do very, very well in the market, and then we're not able to protect our gains, and that's one of the big problems. Okay, the big problem is not to generate gains. The market will always give opportunities, either for small bites or sometimes strong long moves that last weeks. And if you know how to position yourself, that's where the real money is. Okay, now secret number 1 is that most traders do not understand that trading is a risky business. Okay, and you can only be successful and get ahead if you protect your capital and your gains. Now, you have to understand that trader's job number 1 is risk management. It's all about risk. It's all about risk. It's not about gains. The gains are about a byproduct. Okay, so if you make money and become confident and then bust your gains on the next set of low probability wrong setups, you end up losing money, and that's due to the cost of trading and psychological losses. I define psychological losses as large losses. Okay. Also, most people do not understand the difference between risk and money management, which have 2 different objectives. Very often, I hear you know, people talking about money management, and that encompasses risk management, position sizing, everything is there. But no, you have to make this difference in your mind very, very clear. Okay, risk management is something, money management is something different, and I'm going to explain you the difference and how you are going to use it. What's the role of each of them? Okay, so the objectives are completely different. I'll show you some advanced risk and money management techniques that will change your results right away. And then I'm going to do this today. Okay, so risk-free trading is one of the techniques. Bobby saying good info. Thank you. You're very welcome, Bobby. So tell me now, you guys, do you know what risk-free trading is? Give me a yes or no. And sorry, I think you're not seeing my to all attendees. So yeah. So give me a yes or no if you understand or know what risk-free trading is. Okay. In the meantime, I'm going to introduce the secret number 2. To generate life-changing profits and compound them, you must be able to identify the start of trends. Okay. Abdul saying yes, Bobby yes, Zamo yes. Very good. So we'll see whether the the definition you have matches the definition I have. Okay. And I know Abdul knows because we introduced that in the Flipsort Matters coaching program as well. So now, again, to generate life-changing profits, you have to be able to generate the start of trends. Full stop. That's very, very important. Trends are started by smart money and algorithms, but they're also continued by dump money. I don't have a method to identify turning point and start of trends that are initiated by dump money. I only know methods that allows us to identify start of trends with the use of algorithms, or the effect of algorithms on price and the effect of participants and smart money on price. Okay. Now, after you open your first position, you need to learn ways to keep adding or smaller time frames. That's the key to large profits, if there is a trend, of course. So say your position is open based on price on the daily or weekly time frame. Now you can drill down into the 4-hour and hourly time frames, and if you know when to add in the direction of the swing trade, that's gonna make you lots of money. So learning this skill is critical, and it's going to add tens of percentage points to your gains on a monthly and yearly basis. Okay, so this is very, very important. And I want to ask again, so there are people, Bobby saying yes, Zamo saying yes on risk-free trading. Now tell me, how many of you add or have a technique, a clear technique to add to trades based on risk, volatility, and dump money? Give me a yes or no if you typically add to trades. Yes or no. And I'll continue. Secret number 3, and the question here is, are you still learning traditional technical analysis? Well, do you think that really the techniques that are on the books allow us to generate 30% with a small risk? To be honest with you, I don't believe that. I don't believe that anymore. I used to believe that in the past. But my personal experience, and probably your personal experience, shows differently, right? Because I've studied in the years. I really studied a lot patents. I studied many books. In my personal library, there are 300 trading books, and some of the work I'm looking at in the past is the work of Thomas Bulkowski, and he has a website. It's called the Pattern. The pattern site. Okay, and I'm gonna put this in the chat here so you can let me see, so you can actually you can actually look at that. I have a question in the middle. Yes, but does not it add risk again to the risk-free trade at a higher price point? Abdul, you are saying something that actually contradicts itself. If you have a risk-free trade, it means that we have no more risk in the position, so we can add more risk. Yes. So let's say that at the beginning you risk 1%. Okay. You risk 1% at the beginning, and now your trade becomes risk-free. And risk-free, becoming risk-free, it's not hiring the stop. Okay, that's not risk-free trading. I mean, it's one way of doing risk-free trading. But let's say that at some point you have an initial 1% risk, it becomes 0. Now, as the market continues higher, let's say that in here your risk became 0. Okay, maybe in here you can add again or maybe in here you can add again. Of course, you will add another 1% risk, and as the market moves higher, that 1% risk again will go to zero. Okay, so you're saying yes, it adds risk, of course, after you have removed the risk. Okay, so you remove risk, you add risk, you remove that risk, new risk, and you add more risk. But at the beginning, at the end, you will always have 1% of risk if you remove all the risk in the previous position. Okay, but behind two trades, I have some great booms, but then have a miserable bust that wipes me out. And Bobby, that's typical, and there are different reasons why that happens, particularly psychological reasons. Okay, first of all, you have to have objectives in your trading, and that's very, very important. If you know what is your monthly objective, my monthly objective is 15%. That's what I really aim to. I can do better. Sometimes I do 10. The question is, if you don't have objectives, you don't have a reference point. The second problem is you don't have to trade every move in the market. The problem is that we try, and I tried that in the past, to be always in the market. No, we need to be in the market when the risk is low, when the probability is high, and in a way that is functional to our objectives. Okay. Number three is knowing price structure. If you don't know what price is doing, it's very easy to be successful if the market is trending, and then if you don't recognize that the trend has ended and you keep trading in the same direction, and maybe adding in the wrong direction, that's the way we generate our miserable busts. There are other reasons as well, not accepting risk. So we get sometimes those 5% stops that I used to get in the past. They do not belong to trading. And so there are many reasons why that happens. Okay, it's a great question, by the way. But there are ways to work around that, and there is also only a limited number of mistakes that can be done. And once you have managed all of them, and you can manage risk, then you'll slowly be removing those busts. So you can have a look at the trading, the free coaching and course that you find here, Bobby, and also come in the room and we'll try to address those issues. Okay, so what I was saying is that secret trading, it's I don't believe anymore that traditional tech analysis can generate the 30% amount, or can actually avoid us to have those boom bust. You can go to thepatentsite.com and learn that most formations do not have an edge. So rather than trying to trade price using indicators, derivatives of price, patterns, or well-known patterns, why don't we learn to interpret the price itself and understand how price moves? Okay, now there is no perfect 100% model for price, but there are two main groups in the market: those who make money and are disciplined, and that includes algorithms that trade always the same way, smart money, and the crowd that applies traditional technical analysis methods. And I don't want to be offensive, guys, but I was in that group as well. I don't look at that any longer, and in fact, my systems are now based on what the majority is doing. Like, for example, using moving averages. I use moving averages to study what the dump money is looking for. Okay, and we take advantage of that. I hope this makes sense to you. So let me talk about advanced risk management. And you mentioned that some of you mentioned that you use risk-free trading. Okay, now I'm going to show you a way. I do it. I never hire the stop, not immediately, at least. So most people, when they think about risk-free trading, they think about moving the stop to break even as soon as possible, and that's a technique for sure. but you cannot do that early in the trade. And sometimes, especially with forex, where we get those quick move and reversals, that would leave you out of a good trade. So there are different ways of doing that, and I'm going to show you another way. The point here is that secret number one is all about risk management and money management. Now, you can quote me on this. Risk management is of protecting capital. Okay, most people carry too much risk in trading. They really don't understand trading. Your job number one as a trader is to manage risk. It means that you must remove risk as soon as possible. And removing risk does not mean to move the stop to break even. Okay, you can remove risk in different ways. And there are ways that people don't like, and I'm going to show you. This is a big breakthrough and mind shift for you. I'm going to give you today. Okay, this is key. This is important. If you understand this, it's going to make you a big difference. Now, most people move the stop to entry or trail the stop to lock in profits, with the risk of being stopped out of a good trade, and then price continues in the trend. How many times it happened to me? It happened to you. I mean, to me, it happened many times, right? So I needed to come with something different. Abdul, that is exactly why I like risk-free technique compared to stop loss move to break even. So Bobby says yes. So it happened to me as well. So Bobby, this is the shift for you then. We never move the stop at the beginning. Okay, how do we remove risk? We remove a portion of the position and make the overall position and trade risk-free. And I'm gonna show you now an example. Do you understand the difference? Now, why many people don't like it, don't like this? Because they have to say they say, hey, I'm taking the most of my risk at the beginning with the full position, and now you want to ask me to remove part of the position. Yes, I'm asking you for your betterment, and I'm going to show you that that's the best way to go. But why people do not accept that? And people do not accept that because they have to leave on the table potential profits. Can you see it? Can you see that it's all about gains, while it should be, especially at the beginning of the trade, all about risk? And that's an important mind shift that you have to do. Okay, so I understand that some of you won't like it, but this is the way to go. And I'm going to show you how, once you've managed risk, and now you can bring back profits using money management. Okay, so very key. This is something that very few people know, but it's key. And in fact, when I ask you how you are doing risk-free trades, you are basically telling me that you are moving the stops. Abdul has been studying with us, and he knows what a risk-free technique is, the way we use it. Okay, so I hope this makes a difference. And now let's look at an example of risk-free trading here. Okay, and which is key to protecting capital, and that's job number one, and that's the key to successful trading. Okay, so let's suppose you identify the trading plan for your setup. Okay, you have an entry level here, which is in brown color. You have a stop price, which is in red, and this is a long example. Okay, because your entry in brown here, it's above your stop. Okay, so we are looking for a market to move on the upside. If price moves like this, and let's say that price is here at some point, okay, and now it moves like this, so it triggers your entry somehow. You have an entry methodology, and you protect this position with a stop level. If price moves above, you might want to try to move the stop higher. So if price goes here, you might be tempted to move the stop higher, kind of, as we mentioned before, to move it at break even. And that's what the majority of people do. The majority of people also use traditional tech analysis, and that's the reason why they lose between $3,000 to $6,000 in 3 to 6 months. That's a statistic from Oanda on new traders. Okay, now However, the market can and will usually retrace. So what's going to happen is that maybe the market starts from here, triggers you, then it goes here, and then it comes back, right? Now, if you moved your stop here, you are stopped out from a position that could continue higher. Okay, and that's the main problem. Now, let's now show. I want to show you how you can protect your capital using risk-free trading. Okay, and so we are at the new level. That's the risk-free level. How many people knows about how to use the risk-free level? Now, in this example, I put this risk-free level at the same distance as the entry. Okay, people don't like this. The reason why people don't like this is that you have to reduce your position. So let's say that the market starts here, triggers you, comes back, does something like this, and then eventually hits the risk-free level. Okay, what do you do at this point? You actually remove half of the position. Okay, and you let the price retrace freely. Okay, it's a very simple concept. It's not rocket science. Nothing in the market is rocket science, because remember, you are dealing with emotions as well. So the more complicated you make, the less you are capable of capturing in the market, okay, of the market. So now, instead of raising the stop, we just exit half of the position. Now, by doing that, and we leave the stop at the original stop. By doing that, the market is free to do whatever he wants to do. Of course, if he gets below the stop, we lose half of our position, and these even out. These two even out, okay? And so we have zero loss. We only have the cost of business, which is the transactions expenses. Okay, that's what we have when we use risk-free trading. Now, there are different ways to implement risk-free trading. You can implement reduce risk trading, and but this is only the main idea I wanted to give you. Now, why do people don't like this? People don't like this because they say, why I have to exit half of the position? Then if the market goes in my direction, I'm losing out on gains. But that's exactly what inexperienced traders think and do. And that's the reason why they don't like risk-free trading, because they don't understand it, and only they look at the reduction of profits. Only they look at that part. But by taking partial profits at the risk-free level, we end up, of course, with a more smaller position, but we increase the reliability of the method, we protect our capital, and we generate risk-free trades. And the reason why people lose money in the market is because of risk management. It's not because they don't have the method, because their psychology, being not yet disciplined for trading, actually requires that you have a strong way to manage risk. Okay, so the majority focuses on profits and not on risk. Now, I hope you can see this, because you have to understand that you have to manage risk first. If you think of profits first, your mental framework does not reflect the nature of the markets, because the markets are risky. The markets are risky. Anything can happen in any time in the market. This is one of the first of the 5 fundamental truths of trading. Anything can happen in the market. And if you don't believe me, or maybe you have not looked at the charts, look at the Swiss franc chart at the beginning of 2015. Okay. So it's very key, it's very important that you understand that risk management is trader's job number 1. What people don't understand is that once you've managed risk, and this is, again, job number 1 as a trader, and your method shows an edge and a positive expectancy, then you can use money management to reach your objectives and again increase back your gains. All right, and that's the way we do it. I hope this makes sense, and I hope this really will generate a shift in you. So you can use advanced money management techniques to magnify profits and reach the trading objectives you have set for yourself, even if you exit out of the position, and that's key. Okay, so that's the secret here, and you can use money management. A simple thing you can do when you have a positive expectancy, solid edge, whereas you have handled the risk first. You can now increase, for example, your risk, going from 1% to 2%. That's a simple way of doing it. There are other ways, money market slayer, Alf Kelly, on a portion of the capital. There are many ways of doing this, but you have to understand the shift here of this secret is that you can regain the potential in larger profits that you gave up when you became a responsible trader and basically started managing the risk in a serious way, because trading is a business, by acting to directly to remove risk as soon as possible. And so you remove risk first and then you add to profits later with money management. So you can quote me on this: risk management is for protecting capital, and money management is to reach trading objectives. Okay, so please quote me on this. All right, but the idea is that if you focus on risk, nothing is lost. If you focus on risk, you can have a trading system that actually is more solid. In fact, with risk-free trading, you are going to right away raise your reliability of whatever method you use. Okay, does it make sense? Give me a yes if this makes sense, and this is making you think about the way you manage risk. And okay, so it's 9 here. So what I want to do, I just want to I just want to close here, and we will continue in part 3 when we're going to present the 3 steps, the 3 final steps, and also the other 2 secrets. So I just want to mention the fact that if you want to succeed, there are choices, and and if you want to change your path, there are ways I can help. So just let me know if you if you want, and I have opened up some time on my calendar over the next 72 hours to get on the phone with you personally and help you apply these strategies since your training is starting today. So this is a free call. But before I continue, Bobby says, yes, thank you. So I'm glad that we made a shift there. Ali is saying, what is to reach objective, please? To reach objectives is, well, at the beginning of the year, beginning of the month, you have some objectives in your trading, right? That would be, for example, I want to get 10 risk-free trades, or I want to make 10%. I want to have 20 units of risking gains. That's the objective. There are ways to define those objectives, and those trading objectives are very, very important, because see, it's not that we attempt with our trading to do as much as possible. Trading is a business, so we have to model our trading around our objectives. So having objectives in mind is very, very important. Now, and you're giving me a good opportunity here. Tell me, everybody, how many of you have defined your objectives for trading every month? You're very welcome, Al. Write down how many of you have objectives in trading, okay? And I'll continue here. So if you want my help, I can do a free 45 minutes call with you where we're going to analyze where you are, and I'll give you a game plan to reach the objectives during this year. So we can also define your objectives if you want. We'll jump on the phone for 45 minutes. We'll dig into everything that you're currently doing and help you discover the areas of improvements in your trading that are causing you to stay stuck. Okay, that's how it works. You will get some clarity on what you want, your trading and your life as well, how you want it to look like in the future, and from them I'll help you to apply these strategies to your trading. I'll work with you to craft a step-by-step game plan for you to hit your trading goals and participate to the many setups offered by the markets. Okay, the cost 100% free. So I can help. You must have a basic understanding of trading and access to trading account, or willing to open a demo account. No wishy-washy, wishful thinking, ego. You must have an open mind if you want to work with me. And you must be ready to work hard to take your trading to the next level now. If you want my help. Okay, if that sounds like you and you feel like you qualify, then book a session now. How do you do that? It's very easy. But before I get there, let me tell you why I'm doing this. As you know, I'm very keen about training and coaching traders. And why? Because when I wanted this help, it was very difficult to get it. And that's why I'm very active on FX Trade as well. So I sincerely enjoy working with traders and watching them grow and get financial and lifestyle rewards that my experience, hard work, probability research, and strategies can create. And I have many of these. In fact, 30% of my students are highly successful, which means 2 digits per month. Second, you might want to I'll help to take your trading to the next level. If that's the case, and if we think you qualify, then we can discuss how that works and I can help you. If you don't, or if we feel like it's not a good fit that we want, either way is cool. I'm cool because I know that if you come on the call with me, I helped you. So here was to do next. If you are interested, go on www.flipstalkertrading.com/apply and apply for your complimentary trading breakthrough strategy session. No pressure. Will be on the call. You'll tell me what you want to achieve. I'll give you a few breakthroughs, many breakthroughs actually. See, today I gave the breakthroughs about risk and money management. I have many others to give to you when you come on the call with me. So the catch, time is a factor. Okay, so pick the appointment time that you like, fill out the short application, and we'll be together. Okay, you can go now to flipstalkertrading.com/apply. You're very welcome. And if you want to apply for the call, it's very easy. No pressure, and I can keep helping you. Spots are limited. Book a call now, and I want to thank you today for being here and attending this part 2 of the Fearless Trader Workshop. I look forward to see you in the third part. I'm going to give you the last 3 steps in the process, as well as many more breakthroughs and the last 2 secrets for successful trading. Okay? Thank you very much, and have a great day. Bye-bye now.